On a recent episode of When I'm Not Podcasting, I talked about iHeartMedia, and I talked about a story that discussed the infinite dial survey from Edison Research, talking about how more people are listening to streaming services for new music or listening to other places for new music than AM/FM radio. And iHeartRadio in particular, the app and the radio stations get the least amount from younger listeners. That's 12 to 34 and 35 to 54, which is horrible. So the bulk of their audience that's listening to them at all is basically 55 years and older. So no wonder they can't get advertising to go and help out because they're reaching an older audience, and that's what's going on. So they're getting some help. I've talked about here all about iHeartMedia that was back in 2018, there were $20 billion in debt. Then they went through bankruptcy, Chapter 11. They came out of it with roughly $5.7 billion left in debt and new equity partners that were basically vultures to either make that company make a profit or to sell off all the assets and make more money from it. That's the whole idea. That's why they are on this. But now there's a new move for Liberty Media, which owns SiriusXM and Pandora and has a partial minority stake right now in iHeartMedia to go ahead and try to take it all together over. It's part of their deregulation. You know, companies buying companies, media companies buying media companies. It's just normal. Like Stitcher just got bought now by, remember what SiriusXM that bought Stitcher? I think that's right. They got a podcast arm, correct. And they already have Pandora. That just recently happened. So after 6-month review by antitrust staff, the Justice Department offered its approval in just 30 days. Liberty Media's proposal to significantly expand its stake in broadcast giant iHeartMedia was reviewed by the Justice Department's antitrust staff for 6 months. Liberty will buy 50% of the 850 radio station companies' debt, which is now amounting up to $2.8 billion or common stock. Again, it's 5.6. So they're able to go and buy 50% of the company of the 50% of their debt. The Justice Department imposed no conditions, and Colorado billionaire John Malone, who owns most of SiriusXM and Pandora and a third of Live Nation, he owns Liberty, which is a cable conglomerate, which is trying to go into the deal. The DOJ stands ready to fully enforce the antitrust laws should there be any evidence of conduct that would harm competition, including for music artists. So in the story, Liberty's top executives, Malone and CEO Greg Maffei, have reputations for expanding during economic downturns like this one of the coronavirus pandemic. That's why they're doing this right now. iHeart representatives would not comment for the story, but CEO and Chairman Bob Pittman, remember he says podcasting is a birthright. He told Billboard last year he has known Malone and Maffei for years and admired their, quote, impressive collaborative relationship. Now, who's saying that Bob Pittman probably didn't go help broker the deal? Because he knows what kind of money he's making. He might have taken a pay cut this year, and so did the CFO, but they're still getting bonuses for something they're not even doing. Keep that in mind. Now, in May, iHeartMedia adopted a poison pill to prevent a hostile takeover, to protect the best interests of all iHeartMedia stakeholders. And Richard Bresser told analysts at the time, the CFO and COO, that's the other guy that also got a pay cut, but is also still getting money and bonuses coming up this year. So a purchase of iHeart's debt, which the broadcast company reduced from $16 billion to $5.75. I thought it was 20, but okay. Proceeding last year could potentially be a way around these limitations. It's unclear how much control Liberty might have after this debt purchase scenario. Quote, it would certainly limit technical control if it's no greater than 50%. This would be not ideal. They cannot take out the finance department and then take out the marketing, so there's not going to be the cost savings. Could there be some interesting things they could still do on the joint ventures and partnerships and the data sharing and other stuff? Liberty, who did not answer calls or emails, have not announced when it might proceed with the purchase. Since radio advertising is still going to boost to the November election, Liberty might wait until afterwards for the value of iHeart to drop even further. This is where the same idea where Amazon could be interested in buying AMC theaters if the price went down low enough. But at the moment, the shares are around $4.22, $4.25, up to $4.50 at the highest in the last week. This is me putting my investment hat on. Because right now I'm going to move along to iHeartMedia now being considered an investment. And this is why, for all of you investors out there, is because of the fact that Liberty might put a stake in it, and that would create more value. Seeking Alpha talked about this. So now, several things have happened. Here's what's going on. Staying up to date with SEC filings, Brigade Capital Management, with a global hedge fund with $25 billion in assets under management, took a 15% ownership stake in iHeart stock. They're bullish on radio. But again, that's because they're just seeing some more media conglomeration that's taking advantage of on a very cheap price. Because if I look at iHeartMedia's stock right now, I guarantee it's not that much. At the moment, as I record this, it is only $8.86. And if you look at the numbers in the chart right here, look at how bad that is. Okay, they were as low as 674. If I go back 6 months, actually, this is a year. Let me go back 6 months. Okay. I'm going to pull up year. Let's go to year. Okay, here we go. So if I'm looking back, again, they were at $7 down to $6.40 at the lowest in the last couple of months. May 13th. Got as high as $10 because there was, or $11 because of the thought of there might be some chance that Liberty Media might be actually taking a spot, because that's been talked about. But now look at how low this stock has gone down. $6.65. And it did go up to $8.86 because of this story. And there's still room. Market cap $1.26 billion. Jesus. Look at how much money that is. So that's the whole idea. Market cap is said to be that. They're not, I mean, if I had to go and figure out and look at the balance sheet and see how much they're making in terms of money, very interesting. Volume right now is only 1.5 million shares, up to 1.6, and that's it. And the range they've gotten up to before at its highest at any point, it won't show me on this stupid chart, which sucks. But I can go look at others. I can find out somewhere else to go and look for that. Give me a second. Let me pull this up. Let me look at Google. They'll give me the year to date. At their highest, they were up 16 up to $17.85 as of February 19th. Because remember, they've only had their stock back up as of recent, after the bankruptcy. And then the stock price tanked. And there you go. They got the 638, 487 the lowest. But again, it's just been dwindling down under $10 and has stayed more under the $6 to $8 range for this whole time. So now people are seeing this one right here. Look at the last 5 days. Look at the increase up. As you see right there, from the 16th up, gets up $1, gets up almost another $1, all the way up to 86 now. So people think there's a chance they're going to get back up. And again, if they're able to see, once again, $20, you know, like what is the rule of 72? It's like a 3-time multiple right now that you can make almost 3 times your money back if you invested right now as it is. And who knows if there's not another dip coming up very soon, right? So that's going back to the story. So institutional interest in iHeart. Well, this is a hedge fund taking a position in a given stock. So again, there's a lot of people that are probably holding on to the stock right now, and people are just waiting to go and get on the momentum swing to get on the way up. If you're a swing trader, that's what you're looking to do right here, right? So the firm employs a multi-strategy, multi-asset class investment approach to credit investing, focused on companies with leveraged balance sheets. That's what Brigade has done. But anyway, we'll get on to this. So iHeartRadio has a rather leveraged balance sheet, emerging bankruptcy midway through 2019. Bank of America has downgraded the iHeart stock from $12 to $10 and went from buy rating to neutral. They're also getting a Facebook boycott. There's also that's not helping out with things as well. So we're looking at people still listening to AM/FM radio. That's still going on. But again, it's what people are listening to. An older audience is listening to the product, and you're not getting younger listeners or at all. Not much at all. But that's what's coming down to. In this particular story, 1/4 frequently listen to music from AM/FM, and talk listening for news talk for AM/FM is still used quite a bit. So there's all this to go and consider. And there's still a number one return on investment. So payback per dollar spent on radio advertising, according to Nielsen in 2016, department stores get $17 back for every dollar they spend on the air. Mass merchandisers, $16.37. Home improvement, so like Home Depot, which has been promoting on iHeartRadio for years, there you go, quick service, so like maybe a McDonald's or Pizza Hut or things like that, $3 for every dollar spent. But again, those are national campaigns. That's not local. And those are also ad rep firms, Katz Media, which does the ad representation, which was bought by iHeartMedia to do that. So the thing is, they offer a service upon a service upon a service. And that's where people see the average on that. So there's always going to be room for people to go ahead and say, okay, national advertisers are going to still want to put their money in because it's cheap to go and get in there in the first place. So that's what they're considering. So this guy goes on to a lot of other things that you get as to why. Says there's supposedly a captive audience, which is bullshit. And that the audience is targeted. Well, not necessarily. There's so much more. I mean, this guy really went into a full throttle about what's going on here. And you look at the top 25 advertisers. U.S. government puts the most radio spots. Live Nation, which is iHeartMedia's own broadcasting. Home Depot, which is one of the highest sponsors for radio in the first place. And there's others that will do, through like for various network deals. JCPenney used to always do stuff. Lowe's, Macy's, that would be a pretty common thing. Old brands using old technology, old media, right? That's what it comes down to. So again, he looks at the audience for iHeartMedia when it comes to their podcasting. That's another thing they have. 24 million listeners, or 216 million downloads for iHeartMedia among the rest of the market out there. And the only company that's in front of them is NPR. That's according to this. Of course, this is from iHeartMedia stats, if you look at it. So this guy gives a lot of things, and I'm just thinking to myself, what happens if they go ahead and decide to go ahead and have the takeover? And of course, he's saying right here, iHeart takeover is not guaranteed for a lot of reasons. If iHeart continues to exist by itself, management overcompensation needs to be addressed. Yeah, because iHeartMedia is in a bad place. The management's bad. The equity partners are your vultures, and they're just hungry to go ahead and make whatever money they can. They're not necessarily interested in the performance of the business. They don't care. And the shareholders that decided to buy back into it again, it must be crazy. It started off as an IPO around $20 and dropped all the way down to $8, where it is right now. Even with the pandemic, it doesn't make a difference. I wouldn't buy into this. If you think you could buy on a short sale, go right ahead. But I wouldn't put my money into it, not me. But anyway, I hope you enjoy this little media investment moment that I give to you. Like I said, I was going to do some investment videos, kind of talk about it in the middle of these, so I put it together. I hope you enjoyed. If you like me talking more about media investments, I'm doing a little bit of my own. I'm actually doing pretty good on that front. During the pandemic, I'm pretty happy about it. Definitely making more than I'm putting in, which is great. Anyway, please subscribe, share, and like. I'll talk to you in the next video.